This video is created by Jagrat Creation. It is on redemption of debentures. I wish to solve one sum here before you. That's on redemption of debentures. Observe the sum on the screen. This is the sum which I wish to explain and solve here before you. Let me read it first. The summarized balance sheet of changes limited as on 31st of March 2017 was as follows. Issued and fully paid share capital 50,000 equity shares of rupees 10 each, 50,000 6% A redeemable preference shares of rupees 10 each fully paid up, 40,000 7% redeemable B preference shares rupees 10 each less, calls in arrears on 5,000 shares 3,95,000. Share premium account, capital reserve, profit and loss account, general reserve, 5% debenture 2017, creditors, sundry assets, own debenture, investment in own nominal value 1,20,000, purchase price is 1,05,000, cash at bank 5,80,000. On September 30th, 2017, the following were due for redemption. 4,05,000 debentures at a premium of 10%, so these debentures need to be redeemed. 5,06% A preference shares. So this is also required to be redeemed, and 4 lakh. So these preference shares are also require redemption, but you can't redeem partly paid up preference shares. So you can redeem out of this 4 lakh. You cannot redeem the preference shares on which the calls are in arrears. So though they are due for redemption, we are unable to redeem the preference shares on which the calls are in arrears. That's an important point to be noticed by the students. Out of the trading profits 2 lakh earned in 7 months up to 31st of October 2017 to pay the debenture interest and preference share dividend for half year to 30th September 2017. So for half year we are required to pay preference share dividend, and for half year we are required to pay debenture interest. So on this debenture liability, if you pay interest, you will earn interest on the investment in own debenture. That's an important point to be remembered by the students. To offer the debenture holders a new 6% 2023 or repayment in cash, the offer for new debenture is exchange for original holding was accepted by 50% of the debenture holders, including those held by changing. So investment in own debenture, for which we have accepted the conversion of old debentures to the new debentures. The whole transaction was completed on 30th September 2017 and the transfer was made to general reserve, sum equivalent to the cash applied for redemption. So half the amount of debentures are redeemed by payment of cash, and to that extent amount is transferred to general reserve. To make an issue of 60,000 equity shares of rupees 10 each at a premium of 2.5%, this was done in August 31st, 2017, and all the monies were received on the due date. So equity shares are issued, 60,000 equity shares of rupees 10 each, so 6 lakhs is the equity shares are issued. Now, the redemption of redeemable preference share can be made out of proceeds of fresh issue, or either by transferring the necessary amount to capital redemption reserve, or you can do partly by proceeds of fresh issue or partly by transferring necessary amount to capital redemption reserve account. The amount due for redemption is 5 lakh plus 4 lakhs, 9 lakhs. 9 lakhs is the amount due for redemption. Out of that, 6 lakhs equity shares are issued. So 3 lakhs are required to be transferred to capital redemption reserve. In spite of the fact that debenture on which the calls are in arrears are not redeemed, could not be redeemed because of the calls are in arrears. Even then, when the preference shares are due for redemption and you are already resolving to redeem the preference share, you should make a provision either out of the proceeds of fresh issue or by transferring necessary amount to capital redemption reserve. So 9 lakhs are the preference share subject to redemption. The redemption is due. Equity shares are issued 6 lakhs, so 3 lakhs will be transferred to capital redemption reserve account in spite of the fact that the debenture to the extent, see 5,000 shares on which calls are in arrears on 5,000 shares, 5,000 into 10, 50,000. So 50,000 preference shares are not going to be redeemed. They will appear in the balance sheet as liability. The moment the calls in arrears will be paid, they will be redeemed. But remember that when you make a provision either out of proceeds of fresh issue or by transferring necessary amount to capital redemption reserve, you should consider 9 lakhs attached together and the provision should be made. To repay the cash on both A and B preference shares, and this was carried out on 30th September 2017. You are required to show the ledger accounts, recording the above transactions in the company's books, and give the company's balance sheet on 31st of October. Ignore expenses and taxes. Now see, this is a sum which I wish to solve. Now, I want you to observe the style of solving the sum, because the number of ledger accounts that I am required to prepare and the details that I am required to consider, I have a limitation of screen, but I have tried to manage the limitation of screen. So I request you to just tolerate few things which I don't write, but I'll spell out. So this is the sum which I wish to solve. This is the balance sheet given to me. Here I am going to prepare profit and loss account. Here I am going to prepare cash and bank account. Here I am going to prepare so many accounts. Debentures account, preference share capital, 2 types of preference share capital account, security premium account, general reserve account, premium on redemption of debentures account, premium on redemption of preference shares account. All those accounts are required to be prepared. And you know the limitations of the screen. But anyway, let me start with the first adjustment. Out of the trading profits 2 lakh earned in 7 months to October 31st of 2017, pay debenture interest and preferential dividend for the half year 30th September. So I want to consider the first adjustment. So debenture interest is paid out of profits. When debenture interest is paid, cash is paid. So cash and bank account is required, profit and loss account is required. For payment of preferential dividend, I require profit and loss account because the dividend shall be paid out of profits. And the profits earned in 6 months is 2 lakhs. I presume that the profit has been earned. So cash is being, the profit is generated in terms of cash. So I will write down first of all the opening balance of profit and loss account. See, profit and loss account opening balance, this is the original balance sheet given to me in the sum itself. From that I transfer 4 lakhs rupees. And here the changes will occur to this profit and loss account, and the closing balance of profit and loss account, whatever it may be, that I will rewrite here. So in my original balance sheet I will bring the information, I will bring the balances. They are subject to change. After changes, whatever the balance is left after changes is being made, they will be once again transferred to this balance sheet. And on the basis of this balance sheet, I will prepare balance sheet as required as per Schedule 3. So as I have transferred this profit and loss account balance here, I will remove from here. As I have, see, I have removed this profit and loss account, so total is also required to be removed. Now cash and bank balance 5,80,000 that I transfer here. So I will remove cash and bank balance from here, and at the same time, the total also will be removed. See, I have removed total, and these two things are brought over here. Now, first of all, profit occurred 2 lakhs. So cash and bank account debit to profit and loss account credit. This is the 6 months profit is being earned, presuming that the cash and bank balance has increased because of profit. So cash and bank account debit to profit and loss account credit. Now I am required to pay debenture interest. 5% debentures, 4 lakhs rupees. So 4 lakhs into 5% for 6 months. So debenture interest required to be paid 10,000. Debenture interest is paid out of profit. So profit and loss account debit to bank account credit. So this is how from profit debenture interest is being paid. Now I have got 1,20,000 nominal value debenture, own debenture. So this is my liability, own debenture. Investment 1,20,000 is there. When company pays interest to the outsiders, if all the debentures are held by outsiders, you are required to pay 10,000 debenture interest in this fashion. But I am going to earn interest on own debenture. So to that extent, I am required to pay amount less. I am not required to pay 10,000 actually, because on own debenture, 6 months interest will work out to be 3,000. So I am required to pay to the outsiders only 7,000, and this 3,000 is the income on investment in own debenture. So I will credit profit and loss account with this 3,000 interest on own debenture, and the payment made to outsider I will change. It will become 7,000. So interest on debenture is paid. Payment made to outsider 7,000 credited to cash and bank account. Interest paid to on my debenture liability 10,000 debited to profit and loss account, and my income from investment in own debenture 3,000 credited to profit and loss account. This is how debenture interest is being accounted for. Next. Now I am required to pay preferential dividend. So on 5 lakhs, 6% 6 months. On 4 lakhs, 7% 6. So 29,000 total dividend is paid. So profit and loss account debit to bank account credit. In spite of the fact that the calls are in arrears, we have paid dividend on the total amount. So profit and loss account debit to dividend payable account debit to bank account credit. This is how 26,000 dividend is paid. This is how this first adjustment is being taken care of. Next. Now for next adjustment, I prepare this many accounts because I want to redeem these debentures. 5% debentures are required to be redeemed. So premium on redemption of debentures, general reserve. The extent to which the debentures are paid in cash amount will be transferred from profit and loss account to general reserve as we have read in the sum. So these are the necessary accounts that I have prepared for relevant for the second adjustment. To offer the debenture holders new 6% debentures 2023 or repayment in cash. So these debenture holders of 4 lakhs are offered. Do you want to have new debentures on which the interest is going to be paid instead of 5%, the interest is going to be paid at the rate of 6%. So new debentures are given on which interest will be paid at the rate of 6%, and old debentures the interest rate was 5%. Now those who want to have a new debenture of 6%, they can apply, they can opt for it, or those who have not opted, for them cash will be paid. For them cash will be paid. Now the offer of our new debenture in exchange of original holding was accepted by 50% of the debenture holders. So out of 4 lakhs, debenture liability is 4 lakhs. That is redeemable at a premium of 10%, remember it. So 4,40,000 is the total liability to be paid. 50% of the payment is made in cash and 50% new debentures are issued. That is the transaction. And the extent to which the amount is paid in cash, to that extent, amount will be transferred from profit and loss account to general reserve. That is also mentioned to you. And the transfer was made to general reserve, sum of equivalent to the cash applied for redemption of debentures. Now this is the transaction. Now we want to account for it. First of all, this is my original balance sheet. Write down the balances which I am going to change in light of this information. This is the transaction. I am going to record this transaction. Because of the recording of this transaction, the balances of the old balance sheet are subject to change. So let me write down first of all the balances which I am going to change because of this transaction. Just observe my style of solving the sum. Debenture, balance brought down. So this I have transferred, so I'll remove it from here. And after changes, if whatever the balance is left, I will record it here. Now, investment in old debenture, because it is going to be converted. Now, general reserve, because a new transfer will be made to general reserve. Over and above, share premium, because debenture redemption premium is going to be written off against security premium, share premium. So, share premium balance is recorded. So, all the balances that I have transferred, they are removed from the original balance sheet. Now, first of all, debentures are due for redemption, so amount payable for debenture will be transferred to debenture holders account. So 5% debentures account debit to debenture holders account credit, that is the first entry. So debentures account debit 4 lakhs to debenture holders account credit 4 lakhs, that is the first entry that I have made. Now debentures are to be paid at a premium of 10%. 10% redemption premium is to be paid. So 4 lakhs transfer to debenture holders account. On 4 lakhs, 10% premium is 40,000. So debenture redemption premium account debit 40,000 to debenture holders account credit 40,000. So this is the redemption premium. Debenture redemption premium on redemption of debentures account debit to debenture holders account credit. This is how amount payable as against a debenture is transferred to debenture holders account. Now this 4,40,000, out of that, 50% of the debentures are to be paid in cash, and for 50%, new debentures are going to be issued. So 4,40,000, 50% thereof is 2,20,000. So 50% of 4,40,000, 2,20,000. So for 2,20,000 new debentures, instead of 5% debentures, new debentures of 6% debentures are issued. And for remaining 2,20,000, the payment is made in cash. So this is to be paid in cash. So this is how the debenture redemption took place. Now I will make a payment of cash and bank account credit. And this 2,20,000 is a new liability after redemption of the debenture. New debenture liability came into existence that will appear on the balance sheet liability side. So I will transfer 6% debentures to 20,000 in the balance sheet. This is the change in the debenture balance that has occurred that I have recorded in the balance sheet. Now, premium on redemption of debenture is to be written off against security premium. So, security premium account debit to premium on redemption of debentures account credit. This is how the premium on redemption of debenture account is being written off. Now, 2 lakhs is the balance of general reserve. From profit and loss account, I am required to transfer 2 lakhs rupees because the face value of debenture paid in cash is 2 lakh, and to that extent the amount is required to be transferred to general reserve. So profit and loss account debit 2 lakhs to general reserve account credit 2 lakhs. So debentures are redeemed, redemption premium written off against share premium. Debenture holders, 50% of the debenture holders are paid. For 50% new debentures are issued, and the necessary amount is transferred to general reserve. This is how I have considered this adjustment. Now, this account is closed. Now, this general reserve balance 4 lakhs. That will transfer to the balance sheet once again, general reserve. It was brought as our opening balance 2 lakh. It has become 4 lakhs after recording this transaction. So, balance general reserve 4 lakhs that I write with red color. This debenture holders account is being closed. Now, see. These 5% debentures are converted into 6% debentures. So my own debenture of 1,20,000, they are converted into new debenture of 6%. Because the old debenture of 5% are exchanged for 6% new debenture. But the value of my debenture was 1,20,000 and the 10% is to be added 12,000. So my new debenture of 1 lakh, new own debenture, which are converted against the old debenture. So old own debenture were of 5%. New own debenture will be of 6%. So this 5% debenture are converted into 5%. Where is this 5% debentures are converted into this own debenture 5% are converted into new debenture. So here this new own debenture 1,05,000 that will appear in the balance sheet asset side. But remember, its face value is 1,20,000 plus 10%, 1,32,000. So nominal value of this own debenture, 6% own debenture investment, the nominal value is 1,32,000 because 6% debentures, 2 lakhs, 50% were converted into 2,20,000. So here there is a 10% increase in liability. So investment in the face value also will increase by 10%. So 1,20,000 plus 10%, 12,000. So 1,32,000 is the nominal value of own debenture. This is how own debenture account gets closed. This is a very important point. Now debenture account is closed. So these 4 accounts are closed. Still I have not closed the share premium account. So let it be as it is. And let me remove all these accounts and this adjustment. Now I'll proceed with redemption of preference shares. Now for redemption of preference shares, I am required to prepare accounts. 6% preference shares account, 6% preference shareholders account, 7% preference shareholders account. Equity shares are issued because the part of the redemption is made out of proceeds of fresh issue. So equity share capital account. Premium on redemption of preferences because the preference shares are redeemable at a premium of say 5% and 1 rupee, 1 per share premium. So premium on redemption of preference shares account. So these are the necessary accounts that I have prepared. Now first of all, I will transfer this 5 lakhs to preference shareholders account. So 6% redeemable preference share capital account debit to preference shareholders account credit. 5 lakhs. Now this 3,95,000. They are also due for redemption. But the partly paid up redeemable preferences cannot be redeemed. Here calls in arrears are 5,000. On 5,000 shares at rupees 10. Calls in arrears amount is what? 5,000. At the rate of rupees 10. So, if you work it out, the 7% debentures, 40 lakhs into 10 each, out of that, pending redemption, 5,000, on which the amount arrears is 5,000, but the face value is 10,000. So, though the amount is in arrears is 1 rupee, 3,95,000. So, the preference share is of rupees 10 each. 1 rupee is the calls in arrears. So, 9 rupees are already paid. But the total face value that cannot be redeemed. So, total pending redemption is 50,000. So, 3,50,000 out of this 4,95,000. 3,95,000 will be transferred to preference shareholders account and 45,000 liability will remain and that will be redeemed on the payment of calls in arrears. So remember it. So 3,50,000 transferred to preference shareholders account and out of 3,95,000, 3,50,000 transferred to preference shareholders account. So 4 lakh minus 3,95,000, so amount was in arrears 5,000. But the face value of this preference share is 50,000 and calls in arrears is 5,000. So in balance sheet I will write 7% B preference share subject to redemption on payment of calls in arrears is 45,000. Do you remember it was 3,95,000? 3,50,000 is transferred to preference shareholders account and 45,000. So 50,000 is the face value minus calls in arrears 5,000. So 45,000 will be carried forward in my balance sheet and they are subject to redemption because redemption resolutions already passed. They will be redeemed on the payment of calls in arrears. That's an important point. So this is a very important point to be noticed by the students. Now equity share capital balance. So what I did, this 5 lakhs transfer to preference shareholders out of 3,95,000. 3,50,000 transferred to preference shareholders account. 45,000 will be carried forward in the balance sheet, will be reported in the balance sheet. Equity share capital balance is transferred over here. So these are the balances that I have transferred. Now 5 lakhs 6% preference shareholders at a premium of 1 per share. So 50,000 shares into 1, 50,000 is a premium. Redemption premium account debit to preference shareholders account credit. So this preference at 6% preference shareholders will be paid 5,50,000 and redemption premium payable there on 50,000 debited to premium on redemption of preference shares account. Same way. Now see, how much premium, redemption premium? The redemption premium to be provided for is not on 3,50,000, but the redemption premium provision is also required to be made on total 4 lakh redeemable preference share capital. This is a very crucial point of this sum. So 5%, so 3,50,000 into 5%. This is a redemption premium payable to these shareholders. So premium on redemption of preference shares account debit to preference shareholders account credit. And on this share also we are required to make provision. So this is a very important point. So 5 lakh into 1, 50,000. 4 lakh into 5%, this is the redemption premium 70,000. So total 70,000 redemption premium should be written off against security premium. So share premium account debit 70,000 to preferential redemption premium account debit 70,000. And there will be liability of 2,500 redemption premium on this 50,000 and that redemption premium liability will be reported in this balance sheet. So I will transfer this 2,500, the preferential redemption premium 2,500. So what will happen in future? I will receive calls in arrears 5,000. The moment I receive calls in arrears 5,000, I will pay to this preference shareholder 50,000 the face value and 2,500 redemption premium will be paid. So 5,000 and 2,500 is my liability and this is my right to receive. So this is being reported in the balance sheet as you find on the screen. That's an important point of this sum. Now this account is closed. Now for the purpose of redemption, equity shares are issued. 60,000 shares of rupees 10 is bank account debit to equity share capital account credit. The premium received per share is 2.5 per share. So 60,000 into 2.5 security premium received, cash and bank account debit to security premium account credit. So this is the entry for proceeds of fresh issue. Now what is the amount that you are required to transfer to capital redemption reserve? You are required to transfer to capital redemption reserve, which I repeat once again that I have explained to you while reading the sum. Total debentures redeemable are 5 lakh and 4 lakh. See, this 3,50,000 will be paid right now and 50,000 is to be paid in near future. Within a short time it will be paid on the payment of calls in arrears. So total redemption of 9 lakh. Against that, proceeds of fresh issue is 6 lakhs. So you are required to transfer to capital redemption reserve account 3 lakhs. So profit and loss account debit to capital redemption reserve account credit 3 lakhs. So capital redemption reserve I write straight away 3 lakhs. This is how the provisions of Company Law 2013 are being complied with. Now proceeds of fresh issue are recorded. Now I am required to make payment to these preference shareholders. Equity share capital balance will appear in the balance sheet. This 5,50,000 paid. So preference shareholders account debit to bank account. So like 67,500 preference shareholders account debit to bank account. So these two accounts are closed. Now I will close cash and bank account because redemption of preference and redemption of debenture, everything is done. So this closing balance of cash and bank balance will appear in the balance sheet. Now security premium account will be closed. Or profit and loss account. Total of credit minus total of debit. The balance of profit and loss account 64,000 that I write on the liability side. This is a security premium. 1,40,000 security premium. All these accounts are closed. Cash and banking, everything is closed. So red color items are the items that were brought from the original balance sheet. And all the transactions are recorded, and in light of the transaction, whatever the changes that has been made, they are being reported in with red color. There is no change in creditors, there is no change in capital reserves, there is no change in sundry assets. These three items are same in the new balance sheet as they were in the old balance sheet. Now this is how I have prepared the balance sheet. Now on the basis of that, if I make a total of assets and liabilities, it should agree. Now, this is not the way in which you are required to report the balance sheet as per Schedule 3. So let me convert this balance sheet into Schedule 3 for your understanding. But as I was required to prepare huge accounts in this sum, and there was a limitation of screen, so I have prepared the balance sheet in this fashion. Now let me prepare. Now on the basis of this balance sheet, I want to prepare the balance sheet. Let me prepare notes on accounts. Equity share capital, preference share capital. Remember, this premium on redemption of preference share is a short-term provision. Capital redemption reserve, security premium, capital reserve, profit and loss account, general reserve will come up above it. 6% debentures 2,20,000, creditors 2,45,000. Fixed assets, non-current investment in own debentures 1,05,000, cash and bank balance. So this total is how much? 10,04,000. 100,04,000. Now this is how the balance sheet is prepared. Equity share capital, means share capital total equity in preference. Reserves and surplus, long-term borrowings, debentures, short-term provisions, trade payables and short-term provisions, fixed assets, non-current investment, and this is cash and current assets, cash and cash equivalent. Now I have a total of this balance sheet, 26 lakhs 16,500. Here also it should be 26 lakhs 16,500. This is how this balance sheet is prepared. So first I have prepared this balance sheet for explanation purposes. You need not prepare the balance sheet in this fashion in examination. You have to straightway prepare these things, and on the basis of that you are required to prepare the balance sheet as I have demonstrated. So this is a very important sum. I have tried to explain you. I feel that you have followed all these things. Thanks to all of you.